Digital healthcare solutions provider Sancy saw its share price jump on its debut day on the lead market, reaching 26 cents per share in early trade, a premium of 14 cents or 116% over its reference price of 12 cents. It eventually ended the day 150% or 18 cents higher at 30 cents a share. Notably, one of Sancy's strategic shareholders is former CEO of Sapura Energy, Tan Sri Shahril Shamsuddin, who will also serve as the company's non-executive chairman. Collectively, Shahril and his vehicle Sapura Capital invested 13.27 million into Sancy for a 20.25% stake. He explains that he likes Sancy's sound management and personally sees a lot of potential in the medical information technology business. Shahril adds that despite most of its business still mostly being in Malaysia, he looks forward to adding value by providing advice and guidance in respect of its international expansion to help it grow to a much larger size. Sancy managed to raise 7.67 million in proceeds, which will be utilized for working capital, technology research and development activities. Group CEO Prabhuda Kumar Pranab Chakravarti said that it is optimistic on hitting its target to onboard approximately 100 hospitals in Malaysia into its insurance data exchange and analytical systems platform. He notes that there are about 42 hospitals in Malaysia that are currently in the queue to be onboarded onto its platform. He was also optimistic that the group will deliver double-digit growth for both top and bottom lines in its financial year ending March 31st, 2024. This mainly comes from the Ideas platform and hospital information system, while the business processing operations and maintenance business segments will provide the remainder of the contributions to Sancy's growth. Founded in 2017, Sancy provides services of health information management via IT and business processing operations. For now, nearly 100% of its revenues are derived from Malaysia, although some of its existing customers are incorporated outside the country. To date, it serves 27 customers in total. Currently, Sancy has several healthcare providers from international markets including Pakistan, Thailand, Philippines, India, Bangladesh and Senegal onboarding the Ideas platform and hospital information system. Barisan Nasional Component Party Malaysian Chinese Association or MCA has ceased to be a substantial shareholder of car upholstery maker Pecca Group. This after MCA's investment vehicle Huaren Holdings disposed of 12.88 million shares on March 17th. As of March 22nd, MCA via Huaren Holdings still holds 34.68 million shares, representing a 4.61% stake. Prior to the disposal, Huaren Holdings held 6.18% in Pecca. On September 2nd last year, Huaren Holdings emerged as a substantial shareholder of Pecca after acquiring a 5.7% stake. Pecca is controlled by MRZ Leather Holdings with a 49.47% stake. MRZ is the investment vehicle of founder and group MD, Datuk Teo Hua Cheng and his family. Teo personally has a direct interest of 3.17% in Pecca, while his wife Datin Samin Ting owns a 6.74% stake. Other substantial shareholders include Lim Cheng Lin with 5.82% and Retirement Fund Inc. or QAP with 5.14%. Pecca shares closed unchanged at 96 cents, giving the company a market capitalization of 721.94 million ringgit. Forex losses and higher financing costs pull VS Industries' net profit down 31.76% to 30.36 million in the second quarter of FY 2023. Quarterly revenue improved by 13.86% to 1.15 billion on the back of higher sales orders from its key customers. It announced a second interim dividend of 0.3 cent payable on April 28th. For the first half, its earnings rose 8.57% to 91.07 million, while top line improved by 23.23% to 2.44 billion ringgit. Its managing director, Dato' S.Y. Gan, said VS Industry is positive on its prospects as it anticipates a potential uptick in consumer demand in the near future. Barring unforeseen circumstances, he said the group's performance for the remaining quarters should be satisfactory. VS Industry closed 1 cent or 1.23% higher to 82 cent, giving it a market capitalization of 3.16 billion ringgit. Malaysia Real Estate Investment Trusts remain as safe haven investments for investors amid market uncertainty as contagion fears grow following the collapse of Silicon Valley Bank and the fallout coming from the Credit Suisse Group situation. MIDF research analyst Jessica Loji-Ting says that local REITs could provide shelter for investors amid market volatility as they could offer a decent average yield of 5.3% that could act as an inflation hedge. Low is also positive on the earnings outlook for local REITs this year, given that earnings with exposure to the retail and hotel industry are seen improving further this year as consumer spending at malls recovers as well as from higher tourist arrivals. The performance of retail REITs is expected to remain steady, particularly those with malls in good locations such as IGB REIT, Sunway REIT, Pavilion REIT and KLCCP Staple Group. Low says that the research house also expects stronger tenant sales in the second quarter of 2023 and rental reversion to remain in positive territory. She also expects REITs with exposure to the hotel industry, namely Sunway REIT and KLCCP Staple Group, to see better earnings contributions from their hotel divisions. Similarly, an industrial REIT, namely Axis REIT, is expected to report stable earnings due to solid demand for industrial space. As such, several REITs such as KIP REIT and Capital Land Malaysia Trust have shown interest in venturing into the space. Nonetheless, Low foresees that growing competition among REITs in the industrial space may compress acquisition yields for industrial assets going forward. Meanwhile, with MIDF economists projecting Bank Negara keeping its overnight policy rate at 2.75% for the rest of 2023, Low sees this to be a positive for REITs as it eases concern over borrowing costs. Next year, SSY has resigned from its role as external auditor of Sarawak Consolidated Industries because of difficulties in allocating sufficient resources requested by the company based on the fees charged. In a boss filing, SCIB said, upon deliberation by the Audit Committee and Board of Directors of the company held today, the board has resolved to accept the resignation with regret and shall take the necessary steps to appoint new external auditors to fill up the casual vacancy. The largest maker of precast concrete products in Sarawak said the appointment of a new external auditor will be announced in due course. Nexia was appointed by SCIB in August 2021 following KPMG's resignation. KPMG had been embroiled in a dispute with Serba Dynamic Holdings, which together with SCIB shares a major shareholder in Datuk Muhammad Abdul Karim Abdullah. KPMG had resigned from its role as SCIB's external auditor on July 26, 2021.